Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is the 13th. Ooh, I had a terrible night. The baby was crying all freaking night. Okay, so let's go to the charts and see what the market has been doing. And you know, it's been interesting as we've been going through it day by day, but then when you kind of end up looking at it, it's actually been fairly quiet, except for yesterday. We had a pretty good run. So on the open, you know, that usual sell, but then after, you know, well, it took a little bit. It was a little bit before the European close, but then once the European close was really well and done with, we took off, and it was a pretty good rise. We come over into the treasuries. The treasuries were like all over the place. So there was some movement off of the treasury auction, but ultimately here in the overnight, they're unchanged. I think there's this big battle here going on between people that think that the Federal Reserve is going to taper and the guys that just need temporary liquidity because they don't, you know, there's just not enough bonds out in the market. The Federal Reserve bought them all. So, which is really kind of crazy to think about. Okay, oil's kind of meandering around. There's all sorts of geopolitical headlines going around, but none of it has really affected oil so far. Gold continues to try and recover. I'm thinking here, I don't know. Often what will happen is they'll try and fill that gap, right? I would be really careful about that gap fill rule because it's like, yeah, they fill gaps until that one time that they don't, and then that's the only time that matters, right? Silver is still slightly on the downside compared to gold, right? Kind of mirror images of each other. And we got copper. Copper not doing anything terribly interesting. And then the gold. There's a lot of focus on the dollar. There's a lot of focus on the dollar. And 2 days ago after the PPI, the dollar really came down, and now finally today we're seeing another drop in the dollar. Now it looks like that's being driven mostly. Well, maybe not. I don't know. The yen is contributing. The euro is contributing. So, I don't know. Now, as for what we've got on the docket today, we do have import-export prices here in 1 minute. Which is usually not really a huge mover. And then we got Michigan consumer sentiment, which is going to be the big number today, especially since the inflation narrative is still kind of out there. I mean, CPI really diminished the concern about inflation, but the PPI, I think, kind of suggested that we still have reason to be concerned about it over the long term. But the consumer expectations about inflation are going to be a really important factor too. And I would almost certainly expect those to be high. People out there, regular people, are concerned very much so about inflation. So, and particularly cost of living expenses increasing. So, all right, one thing else I should know. Well, Win was kind of posting there. The indexes enter Friday session up 0.8 and 0.6 respectively for the week. The NASDAQ composite rose spot 3 on Thursday. So something that I've been noticing, or that media really has been noticing a lot in the indexes, is that there's been kind of this battle between the small cap and large cap indexes. So Morning, Lucas. You think we can take 4 ticks out of ZN today? Yeah, I think maybe we could. You know, I didn't have too good of a time yesterday. I was trying to build a position when they came up to like the highs of the day. I was trying to build a position short, and it just really wasn't going. And it did kind of come down, but I don't know. The way that it been trading has really been like slippery, hasn't it? They'd be putting 3,000 up there, but it'll trade on 500 or less, which is really annoying. So I'm also really tired. I don't know what that kid's deal is, but it's just like he wakes up in the middle of the night and is screaming bloody murder. Just absolutely. Oh, and he screamed like that for like a good 90 minutes. And I have no clue what it was. And I think eventually we gave him some Tylenol and he chilled out. But it must be like gas or something. I don't know. Have you seen the action though? Liquidity is there, but volume is not quite so. It's been easier to push ZN around summer action, maybe. Yeah, well, the way that I would put it, Lucas, is that you can see resting liquidity out there, but not the latent liquidity. That is that when they trade into it, here, as soon as it gets hit, all of those orders disappear. Did you just see that one right there? There was 3K on there, 150 hit, it pulls to 486. Like even so latent liquidity would mean like there's liquidity that is there, but that you don't necessarily see it, right? The majority of liquidity is latent liquidity, right? Well, you say it's actual volume, but it's really not. It's still the limit orders, right? Because putting your limit order out there gives the market information and signals your intent. There is a reason for major players to not show their liquidity. So they'll still put in limit orders, but they'll put it in right as the volume is coming in and, you know, get the quick and easy fill most frequently. So when you see it ticking through on like 500 contracts, that says to me that like the actual latent liquidity isn't there, right? What you should see is because of how this latent liquidity behaves, that's why we get these areas, particularly in ZN, where price just gets stuck. Because the people that want to trade in that location have already traded. And so there's not a lot of latent liquidity in that area. And definitely not a lot of resting liquidity. And what will happen is they have to trade back and forth across that area for a really long time. So it's funny because nobody really wants to trade there, but they're forced to trade there because the price stays there for so long. And then that area ends up becoming like a high volume area anyways. Right? So I think we're going to get a lot of that. But the thing that gets interesting is you'll find these areas. So right now, most likely it's kind of here at 18. Like you'll see that this price is, if we tick up at 18, you're probably not going to see a strong stack. Probably not. And that is kind of why that price ends up being what it is. But in order to move it away from that, you need a certain burst of volume to kind of like get over the hill, to get out of the hole, right? But then the thing is that when that happens, it's just like it just runs. It's just that it doesn't really take that much in the end. So yeah, it is frustrating to watch for sure, or to be in. Like one of the things that I was doing was I was like, well, okay, so here's this price and this price. Like, I bet you that I could, I don't know if this one will hold, but this one is more likely to hold and whatever. And then I take it and then it would go through me like 2 ticks, like it didn't, nothing, no volume, backwash or anything. Like you were just had to bail, I think it's probably due to the last CPI release. Normally summer is calmer, but that created some extra volatility. Well, yeah, it's not. I don't think it's just that. I mean, I think it is primarily because it is the summer, but I also think that it is because the taper is such a big deal that there's not a lot of really big guys out there trying to make a huge bet in the treasury market. Like if they're going to make a huge bet, they already did it. They did it with all of that volatility the last 2 weeks, and now they're waiting for Jackson Hole. Is what I think it really comes down to. And then the other side of that is that because there is like this dysfunctional market where the rate is artificially high because the Federal Reserve is buying up all of the treasuries, you know, in a market like that, like, why provide liquidity, you know? Well, not why provide a liquidity, but like in an environment like that, you don't want to be hit with the unfavorable excursion, you know. You're going to be, I mean, I am particularly concerned about that. Like, I've been taking on risk, but like I'm really concerned about, like, I'm very noticed when we get into this spot, like right here at 18. It's like, well, maybe I could, if it ticked right, maybe I could try and take a tick out here, but the chances of it, you know, plunging all the way to 15 and then sliding all the way back up to 20 and then back down is like, that's what it's been doing almost every day. So now this will be really interesting to watch on Monday with the micro treasury futures. Yeah. So we're definitely going to trade them, but I think that until things really get ramped up, really get going, like after, let's say after September jobs report, for instance, I think that we still need to be a little bit careful because this is probably still going to be slippery, and the micro treasury futures are probably going to be even more slippery. All right, I need to blow my nose here. Micro yields is going to be so much fun, I think. Uh-oh, there's a sighting of a living murder hornet in Washington State. The broker agrees. Do you know what the commissions are going to be? Surely they've been announced by now, but I haven't seen anything about it. Because if it's really $1, I'm gonna be like, ugh, kill me. Like if it's $1, the tick size, you know, like in the E-mini, okay, or E-micro rather, you know, it's one tick. It's not really a huge deal because one tick is like 125 and it moves so much more than that, you know? But if it was $1 in the micro treasuries, and especially if you're going to be trying and spreading and everything, like that gets so expensive so fast. If you're actually scalping and providing liquidity, you're paying so much, relatively speaking, in commissions. So yeah, they'll make money on it, of course. No, some stuff on Twitter. I want to know how I say this. I was saying to Brannigan, like, traders do not realize how much data is really required to really verify that a strategy is effective. And he was saying, well, I know a few leap of faith millionaire traders. And I'm just thinking, well, the easy was the. Well, like, I don't know if this is the correct way of saying it, but it seems to me that the easiest way to make money is to take risks, right? It's so ironic that when I'm talking about technical analysis, that the biggest stumbling block to people understanding the issues with really the technical analysis of price is that you can make money from taking on risk, and that doesn't actually mean that you had created a probable signal from the price data, right? It doesn't take as much skill. Well, I don't know if I would say that. I shouldn't say that, but it doesn't take as much knowledge to make money from taking on risk. And yet, most retail traders don't realize that when they're making money, they're making it because of the risk that they took. And then I really am tired. So the other thing I've got on my mind, maybe I can show you. In some sense, traders are just crowdsourced liquidity providers and underwriters to market function. Well, I don't know if I'd say that either. Like, the thing is, I don't know. I wouldn't say that we so much provide liquidity as it is that we provide noise. Like, the market needs noise, essentially. So I made this stop that. I made this TikTok. I'm not going to play it for you. Oh, I have to log in to see it. Wait, hold on. I don't even know if I remember my let's see if this works. Login success. Yeah, okay. This guy has a Discord and Twitch and profile is his name. What a goon. Some of the comments in here on this thread where I go through and I'm like, technical analysis isn't very effective, are just seem so clueless to me. So where was this last guy? I think I'm going to address this one. It says, unfortunately, my friend, the markets is ran by bots and therefore works wrong. Because one, as I've already covered, competitive nature of markets means a lot of people using it doesn't actually make it effective. it actually makes it less effective. It makes it harder for you to make money from that, even if there was an actual edge behind it. But number two, that's not what the robots use. At least I think that the evidence, I don't work for Rentech, but I think the evidence strongly suggests that that's not what their bots are using. You know? There was this other guy that he made a bunch of comments all in through, and man, it was like he was like, how do you trade without a chart? And I'm like, you use the DOM? He's like, oh yeah, the DOM, that's just another great indicator that can go along with your excellent technical analysis. And I'm like, no, like, you've never used the DOM before, have you? And he said, no, it's just liquidity. Like if you guys knew what you were talking about, you wouldn't be saying these things. Like the thing that irks me the most, you're just getting him into a deeper hole. I know, that's so funny. It was this guy right here. He said, TA gives you the price targets and trend analysis. It's not meant to be a crystal ball. It's meant to guide your decision making with probability. So here's where I'm saying, like, if you really knew what you were talking about, you wouldn't say that. Because the probability on these setups isn't there. Trying to get something that actually has probability that says this thing is effective at predicting the future price movement, it's practically impossible. And none of these signals that you see talked about on internet forums do any of that at all. Not even close. You backtest every single one of them. You find that out very, very quickly. And then he's going in here like, oh, TradingView, there's like support and resistance lines, right? Then what did I say? Yeah, just another... said use a DOM. He said just another indicator that goes almost perfectly with correct TA. Actually a great tool for seeing how strong your TA is. It just makes me like, it makes me feel embarrassed for him to see people say that. That's why I asked him, like, you've never actually used one, have you? And he said, yeah, it's just liquidity, man. No, you've never used one. You've literally never used one. You've probably never used a chart outside of TradingView. I just... One of the sad things, there was a lot of people posting in here like, you know, please elaborate, etc., etc., etc. And then when I went and I made the other... I freaking hate it that when it does that. Freaking hate it when it does that. If I go back here. Okay, so like this video had 14,000 views. And it's still going up. Like people are still watching it. A couple of these ones were 500. But then when I really started to give people like the meat, the stuff that really teaches you something, 177. Francis Hunt. Well, it comes back to the same question though, right? How do you know that his success comes from TA? How do you know? For starters, have you seen a 2 to 5 year record of all of his trades? Right? Because that would be the only way that we could say that he's having success with technical analysis, right? Because we gotta remember, we are very susceptible. Yeah, Lucas says they could argue the same thing about the DOM, though. I think you can. Yeah. Okay, so if I come out and I say, excuse me, trading on the DOM works, Okay, prove it. Well, this one guy, he trades with the Rotter. Rotter, what was his name? The flipper. The flipper, he used the DOM, and he was a very successful trader. Okay. How do you know that his edge came from the DOM and not from him flipping things? Which I guess you couldn't really do without a DOM, but I'm just saying, like, getting into the actual analysis, the actual should the market move this way or that way sort of a thing, right? How do you know? Well, without being able to look at his trades and how those trades were made, I don't think you can really verify that, right? Because the thing is if I have if I have an algorithm, if I have a back test, let's see if I can find what would be a good one. I don't know if I really have a good one to show this example, but well, I'll just use the example that I was using in the video. Okay, which one is the best? Yeah, right here. Here's a strategy. Okay, you can see how it traded over the past year. Year isn't enough data, frankly. But look at that. Sharp ratio 1.13, profit factor 1.54. Where is the maximum drawdown? I mean, the maximum drawdown is nothing to joke about, but it's 3.5K, but it's not terrible. Not terrible, right? The reason he's not around anymore doing the same thing is because he's no longer legal to spoof. Yeah, but there you go. His edge probably wasn't analyzing data from the DOM, was it? Okay, so HF has a good theory. Nothing in isolation works, rather it's all of it together that gives an edge. So how do we prove that? How do we prove that? Well, I suppose we could go in and we could make an algorithm that uses, quote, everything together and show that it's effective over a certain period. But that's where I come back to, like, okay, so like once you have trades in front of you, there's certain things that you can analyze about it. Okay. So is there anything that stands out to you about these backtest results that I have up on the screen right here? I'll just leave that there for a second and let you give you guys a few minutes to see if is there anything that really stands out to you about these backtest results. How do you find strong support and resistance levels? Well, supposedly there's an indicator on TradingView. So something that you'll notice with technical analysis over and over and over again is that they'll move the goalposts back until you get to, well, this thing works, but you can't verify that it works because it's not automatable. It almost always comes to that. Because anything that you could actually verify says it doesn't work. Anything you can actually verify seems to not work. Nassim Taleb says independent is what people will call you if you don't disagree with them. Oh man. Come on, guys. What is off about this backtest? I don't know. I think the results on this are still really good. I think we should put a bet on it. Seems your strat would require a large account to not get flushed out. I mean, I'm only trading one contract, so if I started with 4K, I would not get flushed out. Sure would be an ugly drawdown though, wouldn't it? Do you believe in the theory of whale orders that move the market? Well, I think that it is true that, well, let me put it this way. Do whale orders move the market? Yes, they do. But small people orders move the market too. The amount that just small, completely uninformed trades make on the market is actually quite significant. And furthermore, you got to realize that a lot of the trades that the whales make don't mean anything. You know, like they're rebalancing their portfolio. They're not actually expressing an opinion. You know, like if every whale was always a congressman that knew a certain law was coming in, he had insider information and knew what was going on, then it would work, right? Well, I don't know if it would work, but you would maybe have a little bit better of a basis for a trade, right? But most of the whale activity doesn't actually mean anything. So when I tell you the issue with this strategy, you can be like, "Oh, yeah, of course." I'm gonna give you 2 more minutes to try and guess what it is that really bothers me about this back test. Bank of America says investors storm into value trades as broader equity exuberance fades. Well, that would be nice. That would be nice if value started to perform. Don't be shy. Don't be shy. I can send you a video with a volume setup. Okay. You have one that's like a back testable? Is it back testable? I mean, I would very much love if it was. Oh, you don't have the commissions in Oh, I don't? Oh, you're right. I don't. Well, you know what? I think that is just because I pulled it back up, because you can see here in the backtest settings that it has include commissions ticked. But your drawdowns are on the higher side, I feel. So, if you make 9,000 and your maximum drawdown is 3.5, I would say that comparatively speaking, that is really quite good. So if you come down here to the bottom, right, and we look at the drawdowns, like some of these are like in the 20Ks, right? So the thing with this strategy that's interesting is that the Sharpe ratio is 1.13, which is really high. Now, the way that NinjaTrader Trader computes this, you know, when you're talking about an intraday strat, is kind of a little bit sketch, but so here's what bothers me about this strategy. It only goes long. It only goes long, and it's a strategy that's running on the S&P 500. So how can we say that I'm finding a probable signal? Like this now mind you, the winners are like 1.5 times the losers. Okay. But the win rate is 47%. How do we know that 47%, if I were to do equal risk reward, so I have another one that's equal risk reward. Let me pull that one up. Dum, dum, ba-dum, ba-dum, bum, bum. Oops, date. Pull it up like that, and then it would have been, probably would have been this one, right? Reward factor 1. No, not that one. This one, for instance. Okay. So, winning trade, losing trade, pretty much equal. Percent profitable, 57.36%. So, 7 plus 5, I would say. So like a 12% edge. How do I know where is that 12% edge coming from? Do you think that it is because I'm finding a probable signal with order flow? Or is it because I'm going long and the move in the S&P 500 has been to go long? You know what I mean? This is a serious problem when you're looking at the effectiveness of technical analysis setups, because when you really get into the data, if people are having success with them, it's because they're buying. It's because they're buying. I mean, if you got something different, if you get a strategy that only goes short and it catches a very high win rate, then I'm like way more impressed, because the S&P 500 is almost always going up, You can't distinguish what it's doing. You're right. There's no way for me to separate out the edge that comes from the signal itself and the edge that comes from that it's only taking long setups on the S&P 500. I could turn around and I could try it on a different instrument, but what would that really tell us, right? Yes, it's probably not that good, because soon we'll have a bear market, yeah. Like, how is it going to perform when there's a bear market? It could get absolutely just destroyed in a bear market. Like, it's only a year's worth of data, too, so that's a big problem with it. The creator of Darvis boxes took advantage of the bull market to grow his wealth, and by the time the next bear market came, he didn't need to be in because he was already wealthy. Yeah. Okay. Fair enough. But you see the issue, right? Even just showing that a profitable strategy doesn't necessarily prove that the profitable strategy came from technical analysis. In this case, it's order flow, but depending on your definition, that's also a form of technical analysis, right? So what do we do? Well, I think we take a different approach. We develop a theory of markets, and then we look for evidence that everybody can verify for themselves empirically by looking at market behavior to prove or disprove that thesis, right? Yeah, I do have algorithms that go short, you're right. So the theory that was behind technical analysis was that markets are mostly efficient, but that you can make money from trends. And because markets are mostly efficient, all of the available information is accurately reflected in charts, right? And what do we find? We find that markets will frequently deviate from true value and will stay there for extended periods of time. Like GameStop and AMC are still ridiculously valued. And there's all of this excess volatility, far more excess volatility in the stock market than could be explained by the efficient market hypothesis. Because if the markets are efficient and there aren't a lot of changes in fundamental value, then there shouldn't really be that much volatility in stock markets, right? So the efficient market hypothesis doesn't explain it. Okay. So the alternative that I propose is the inelastic markets theory. And what does the inelastic markets theory say? The inelastic markets theory says that when price change, because elasticity, remember, elasticity is a measure of how much supply and demand changes when the price changes. And an inelastic market says that it's the opposite. It says that an order has a really big effect on the price, rather than the price having a diminishing effect on the order, right? So much so that you put $1 into the market and it could move the market $3 to $8. Okay. And from that perspective, okay, with that theory, what does that theory say then? The reason that there is excess volatility in markets is because orders have a really dramatic effect on prices. Or the ability for orders to move price is very significant, right? And that not only does it give an explanation for why there is so much volatility in the stock market, but that when you go and you actually do the calculations and everything, it matches exactly what the volatility is. So it not only does it explain that there's volatility, but it is correctly able to quantify how much volatility there is. Yeah. Okay. So now we have a more effective theory for markets that matches our observations. And what does that tell us? Orders move price. If you want to predict price movements, you have to predict future order flow. Okay. If you try and use price, you're going to get mostly noise because the orders move price too far away from fundamental value and everything else. And any kind of pattern that you're trying to find in price just gets washed out by the noise that's created by random orders. If you looked at survivorship bias in the S&P and if a real thing, how that might obscure real historical terms. So there is definitely a thing to that, because in the S&P 500 on a bi-yearly basis, they take out losers and add new stocks in. It really changes, it particularly if you're looking to invest in individual stocks, it really kind of changes the picture, sure. So the real question here is, there you go. NASDAQ Trader asks the question, how do you predict future order flow? Well, the paper gives some suggestions, actually. Let's go read that. Let me open it up here. So here's the paper by Gabiax and Koijin. And down here at the bottom, I think it is. Maybe I went too far already. Here it is right here. Here we are. What are the determinants of flows? it is clear that it would be desirable to know more about the determinants of flows at a high frequency. We provided a minimalist model with a behavioral disturbance and some simple correlations in 4.4, but this is clearly a first pass. Establishing the various channels of flows could be a whole line of inquiry, perhaps with microdata such as those used by Tale et al. In 2009 or Giglio et al. In 2021. So those are two studies that we should go and look up, huh? To appreciate the richness of those determinants, let us observe that flow shocks could come from various sources such as, and then here's the key part, changes in beliefs about future flows or fundamentals, as these both affect expected returns. Liquidity needs, for instance, insurance companies selling stocks after a hurricane. More generally, heterogeneous income or wealth shocks to different groups, including foreign versus domestic investors, changing the effective propensity to invest in stocks by the average investor. Corporate actions by firms such as decisions to buy back or issue shares. Shocks to substitute assets, which might, for example, prompt investors to rebalance towards stocks when bond yields go down. Changes in the advertising or advice by institutional investors. Roadshows in which firms or governments tried to convince potential investors to buy into a prospective equity offering or privatization. Mechanical forced trading via delta hedging, whereby traders who have sold put options and continuously hedge them need to sell stocks when prices fall. Right? So they're saying here, like, these are all things that they could write a study on. Not only are these all things that you could write a study on, but these are all things that you could potentially build a model off of and trade from. These are rather who questions rather than how questions. No, not necessarily the truth. Like this last one, we know people are doing that. Mechanical force trading via delta hedging. And then what do we do? We go and we look at what options people have bought, and we calculate what their delta positions are to find out where they're going to have to sell put options and hedge. Right? And then we get these gamma unwinds. And so you can build a model to model how the market behaves from the gamma hedging. That's all true and good if one has a 100K account to trade one contract. Now, some of these seem a little bit more discretionary, right? Corporate actions by firms, such as decisions to buy back or issue shares, right? That's okay, they just announced that they're going to buy back shares, so I want to buy ahead of them, right? How do you automate that? Okay. But a lot of them, these all sound like fundamentals, right? These aren't exactly market data signals. But, you could see how it could turn into it, especially with this last one. The reason why I focus on this last one is because this is like, oh, okay, if it gets to X price, then the supply and demand dynamics change. Isn't that what quants do? Well, so here's another study. This is by Jean-Philippe Bouchard, the God. As in my opinion, you really want to understand markets, guys. You really want to get an advanced understanding of markets. Read Bouchard. Okay. And he says down here at the bottom, he makes up a comment about the robots. Where is it? The idea that it is the order flow, and let me zoom in on this a little bit. The idea that it is order flow that must be predicted, even if uninformed, resonates well with the intuition of finance professionals and allows one to understand why statistical regularities might exist and be exploited by quant firms. Indeed, Flow data is quite popular among statistical arbitrage funds. The order-driven paradigm also allows one to resolve some paradoxes, like, for example, that it is surprisingly easier to find predictive signals for large-cap stocks than for small-cap stocks, probably because the former are more actively traded and the order flow reveals more statistical regularities. The 2007 quant crunch and other recurrent deleveraging spirals are also extreme consequences of the impact of order flow on prices. Yeah? So what is he saying? He's saying, I think that quant firms are reading order flow. And I think that because they spend a lot of money on flow data. And it's consistent with our theory of markets, which suggests that you should be able to pull out statistical regularities from the order flow. So this theory of markets suggests that, yes, you can find a statistical irregularity in order flow data, and that's probably where quant firms are making their money from. That doesn't mean that you're going to find one, but suggests that you can. But that would be a scattered theory that more than an inclusive theory. We need a parsimonious theory that includes every one of these participants while being economical. Well, think of it from this perspective, okay? It's been like almost 100 years now since they had this whole argument about the efficient market hypothesis, and researchers went out trying to prove and disprove it, okay? Now, if we now that we have a theory that is much more consistent with our observations of the market, think about how much research is going to be done over the next 100 years on this particular subject. And then, yes, they're going to find all sorts of things that have an aggregate effect on the stock market and are able to make more accurate predictions, even on high time frames, right? And as time goes on, that probably the better and more unified the theories are going to become. Because it sounds to me like they can come in here and they can say, okay, if a company is going to buy back shares, how much money are they going to put into buying back shares? Okay, they're going to put $5 billion into buying back shares. Well, then it should result on average in 25 billion in market cap being added to my company. So how many shares are there divided? And now I know what the price is going to be. You see how that works? Do we know what the top quant funds make per year percentage-wise? Yeah, and they do. So one thing that I would know is that it does appear to me that the quant funds that they're also making money from taking on risk. You get what I mean? Like, so often it comes down to doing something that is liable to lose you money. I wish quants fail miserably. I hate them. Well, the thing is that when you look at this, it's I think it kind of suggests that the quant firms are not necessarily our enemy. Right? It's just the randomness of markets is our enemy. That's the thing that makes it so hard. Is there a way to see what the quant funds are risking? No. But just the fact that like what their percentage gains are on the year and then how they perform during difficult markets So, for instance, my understanding is that Rentec did not perform that well on the downturn. So, there is very clearly frequency data in price charts. So, why not do a Fourier analysis? Well, so there are Fourier analysis type indicators out there, and I've tried building strategies off of them, and they were interesting, but ultimately they didn't appear to have a whole lot of predictive power. Question is how to benefit from randomness. Yeah. And the issue is like that excess volatility, you know, because if it was just that markets were random and you know, they just randomly moved around in anchor price, then the whole idea of like support and resistance would kind of make sense, right? We would just say, hey, buy it when it gets here and sell it when it gets here, and just take that as it goes across that thing until like fundamentals change or something like that. But the excess volatility picture kind of gives us a different picture, right? Because it's not just that like it's going to be random. It's like if I come in with an order and I move a set of orders and I move price up, it moves price up, and then those effects are long lasting, and you know, if more flow comes in, it's going to continue to go up. And so you really can't make very effective predictions based off of the price action, whether it's going to continue going up or reverse or anything like that. If you can look at the order flows and you can predict the order flows, then that's a different story, right? But my working theory right now is, okay, assuming that the inelastic markets hypothesis is true, then any kind of regression on a single time price series is going to be ineffective. That's what it says to me. That it's not possible for you to filter out the noise. And so you are better off trying to find statistical irregularities in order flow. Say that again. Okay. My working theory is that the inelastic markets hypothesis is true. And because of that, any kind of regression or prediction based on patterns in price are going to be ineffective. Because orders result in too much noise. That what you're looking at in price has no predictive power, essentially. And so it makes more sense to try and find statistical irregularities in orders. True. Well, I don't know if we could say it's true. I would say it's a good theory that matches up a lot better with our observations of the market than what people that promote technical analysis claim. And presumably, it should result in more effective trading, with the caveat that it's still competitive and that probably still the majority of people are going to lose, right? By the way, this move up, there actually was a little bit more. You see right there, like in the middle, took a little bit more orders than it's been to push them up there. So it's Friday, so maybe we'll see that, people trying to grab the liquidity sort of a thing. I also wonder if the E-mini is going to repeat the same sort of pattern. So I'm wondering, why is it that we've seen the E-mini sell right after the open so often? Because I saw something the other day that suggested that there was like a fade late in the day, and that tended to come from some hedging activity, and I don't remember how they were showing that, but they were like showing some hedging activity. And so I'm wondering, could we predict those flows in the S&P 500 by looking at the hedging activity that would maybe need to happen every morning? You see how that works is like we build a theory, right? We work with the inelastic markets hypothesis, and then we try and come up with a theory for why we might be able to predict a particular order flow. And then we can go out and we can look in the markets for things that might support that theory. It's poking for a big short. I always felt that pattern trading was for position and swing traders. Well, I think you're probably right. I mean, that is definitely another issue, is that it seems like that the lower time frame you get, the more high frequency you get, the less and less effective price analysis seems to be. But I would contend that the reason that this kind of analysis seems to be effective on the higher time frame is because of the S&P 500's tendency to move up. You turn around and you try and run that kind of analysis on treasuries, and it's a different issue, isn't it? What do you think about buying options on futures on the S&P? I've never really gotten into it, to be honest with you. You know, like I like staying small. You know, maybe someday I really get a hang of this enough that it makes sense to try bigger things. But I say trying to scalp off of order flow is difficult enough. I heard it's a good hedge. Maybe. Probably you could make some money market making with that. But like here again, I think that to do that, you would want to be making, you would be looking for statistical irregularities in the order flow of the options that allow you to catch little inefficiencies here and there. Okay, the treasuries move up there as we're getting ready for the S&P 500 to open. I fundamentally rely on order flow, and I'm neither one of those. So I give you an example. So I told you I got to talk to Gary Norton the other day, right? So awesome. And we talked for like 4 hours, and I learned a lot of things from him. And I hadn't taken his course, but I got a pretty good idea of what's in it, right? And I've been kind of trying to apply some of those principles in my own trading. It's still hard, right? So even with a really solid instruction from somebody that I really think is the final remaining expert on discretionary trading in this manner, no guarantee that you can make money, you know? The question for me though is can we find not the question for me, on a slightly different topic. Have you tried technical analysis like Elliot? Well, yeah. Oh, yeah. You got to understand, for the people from the TikTok, I don't know if there's anybody here from the TikTok, but the thing that frustrates me about the TikTok is they're saying like, well, here's this expert and this expert, and they say this, and I'm like, okay, like you realize that I was learning about what Elliott waves and Wyckoff was when they were still in elementary school. Like, yeah, I tried it. I had a lot of success in the post 2008 world. And I thought that it was due to technical analysis. And then, when I was at the firm, I kind of got a lot of inklings that wasn't true, that technical analysis wasn't very effective. And then when I really started trading on my own was when I think it really confirmed to me that those theories were not effective. But, it kind of comes back like Wyckoff's whole idea that like they mark up prices and then sell it to you and all of that sort of, that's all fine and dandy. All I'm saying is that trying to do an analysis using solely price is just not going to work. And that's what I'm saying. Well, that's pretty good. So I think what we want to do is go short a little bit. I'm a little bit surprised at how much buy pressure, how much buy pressure is coming into the treasuries. Wyckoff pattern will pay you sometimes. There's a lot of people making all sorts of claims about Wyckoff with Bitcoin and stuff that I just thought were so much nonsense. It was really startling to me how many people coming out all saying the same thing in crypto about this. It was like, it's got to be some sort of coordinated effort. Like, what the heck? Yeah. Well, so a while ago, there was a bunch of people saying, here's the Wyckoff pattern in Bitcoin, and this is what's going to happen. Anyways, I got distracted. I was going to say, so to switch things up a little bit, there's this other question. So it's like, okay, can we find predictive signals? I think that if you can find a predictive signal, that's a better game, right? But it seems to me that is a very competitive game, that there aren't a whole lot of predictive signals out there, and that what you do find might not be that big of an advantage, right? So you have to question how worth it is. Yeah. So if that's true, we should also be spending our time finding ways to make money without having that predictive advantage, right? So how do you do that? Well, I can think of two ways. One is to just invest in everything and average it out. And that would be buy and hold, right? Which isn't very interesting for us. And the other way that I know how is taking on excess risk. So I'm really interested in trying to find better quantitative evidence of the most effective ways to take on risk. You know what I mean? Because surely I know that one way of taking on risk is to have a stop that's much larger than your target. But there's like some really big downsides to those, right? But like if I can quantify those and select, a risk profile that is the most optimal to what we're trying to accomplish, then we should do that. I don't like that idea. Why not? Like it seems to me that as long as we're practicing good risk management and we're doing it in an effective way and we're using money that we can afford to lose, how is it possible to predict smart flows if most of them execute VWAP or percentage of volume? My understanding is that the more sophisticated execution firms out there no longer use VWAP. That they moved over to Almgren Chris. If you haven't read Almgren Chris, you should go read Almgren Chris. Well, it's really slow, but the E-mini is tilted down a little bit. Please send info about Almgren. No. Let's see here. Do I have it somewhere? I should have it on my machine here. Let me try and find it. Should be in my good. No. Huh. I need to find a better way to organize all this stuff that I've got. Well, we got some really good excursion there, but then it came right back, didn't it? So this is a little bit too complicated to go into here on stream. And to be honest, I don't understand it all. But they basically get into some really complicated math and ultimately come out with there you go. They come up with these this is what you really want. So this is what they're saying, time periods. So what they're saying is, okay, and here's your shareholdings. Okay, so like they're saying that there's 10, you have 10 blocks of shares or whatever, and this is how long you have to execute it, right? They break that time period up into 5 different time periods, and then they say, okay, in this first time period, you want to do most of your transactions, and then you want to do half of that, and then half of that, and half of that. You see? And you get that curve. But it depends on what you're trying to do. This is the risk adverse way of doing it. Risk averse way of doing it. Whereas this way is a little bit more of a risky strategy. You'll make more money, but you're kind of taking on risk by doing it. And it also changes based on what your expert, if you expect the market to be moving up or down or whatever. Dark pool whisperer, that's funny. I mean, you might be able to pull some stuff out by looking at what's happened in the dark pools. So here's answer this, because I've seen a lot of people talk about dark pools when we're talking about order flow, and I'm like, why does dark pools matter more to order flow than it does to technical analysis? So it seems to me that the dark pools would be like a prime evidence that technical analysis shouldn't work if dark pools exist, right? Under the orders move markets theory of markets, that something happens on another exchange and it doesn't move price, doesn't really matter because you'll still have orders over here. Dark pools are private exchanges where large institutions can trade against each other without the rest of the market seeing it. And you can carry out large transactions. Yep. Oh, I didn't notice that Tommy messaged me. So he wanted to send me a video. You got a volume setup we can backtest. That'd be awesome. Anything new to backtest. Even really crappy technical analysis setups that we know aren't going to work. Well, we should remember that we got consumer sentiment coming up at the top of the hour. I was about to say, it was like, oh, it's been fairly quiet. Tesla shares near 4-month high. AO says oil is dead. It's pretty quiet today, isn't it? So looking at the consumer sentiment, the estimate is 81.2, and the previous reading was 81.2, and the inflation expectations at 2.8. So I think that the inflation expectation is going to be high. There's not an estimate for that, but I think it's going to be high. Well, I tried taking a short there. I probably should have managed that and gotten out of it, but I was kind of feeling like, oh, I don't really know anything that's going on. I should just hold to it. Now I'm kind of regretting doing that, but we should probably expect that some of my decision making is going to be really faulty today because I did not get a full night's sleep. Although I do feel like when we were discussing technical analysis here, that I did a pretty good job of getting the words out. I tried scalping the oil the last 2 days and I got rolled over. I'm tempted to get short the ZN, but I don't know, like, is there really a reason for me to want to take a hard position going into the consumer sentiment? Because the consumer sentiment could have a really dramatic impact. In fact, I think that you're going to see a pull. You're probably going to see the liquidity pull 10 seconds into it. I was listening to your explanations in my kitchen and I could easily follow what you were saying. Good. Well, I spent a lot of time thinking about it this week because of TikTok. I guess I need to start thinking a little bit more about what is the best ways to try and explain order flow to these guys. The best way to give viewers is give wrong information and then sit back and wait for everyone to tell you why you were wrong. I'm starting to think that the best way to get viewers is to just act like you have a really big ego. I don't know, man. I've always kind of felt like I think too highly of myself and that I have an ego. But then when I look on social media and everything, it seems like that everybody that's being successful is way more than I am. That's basically like exaggerate your credentials. Yeah, you have to post a few 25K days, and that would do it. Look at that. Interesting. Oh, you got it? Yeah, I'll take a look at it. I'm not quite sure. My understanding is that my wife is going to be gone tonight. So, and I'm going to try and work on the combine video this weekend. I don't know if I'm going to get a ton of time to do it, though. And I don't think my parents are going to be around this weekend either, because one option would be to get my parents to come over and just watch the baby while I work. But I think that they're helping my sister finish their basement again this week. So, yeah, you guys don't remember that? I guess I didn't say a ton about it while it was happening. We were running one of the robots on a trader evaluation. Hey, Ace, if you want to come up and help me babysit. I don't know if that works because it was, we've been sick and we have immunity to COVID, but we're not vaccinated. And he's certainly not vaccinated. So I don't know if Ace would actually want to come up right now, but I need a babysitter. Dads don't babies. I call it babysitting. And when my wife's doing it, I call it babysitting because, like to me, well, I know that it is not like that, but to me, raising the kids is like teaching them principles and giving them rules and things that are going to make them more effective at interacting with society and living in the world. This is keeping an eye on him 24/7 to make sure he doesn't kill himself. That's a very different thing, right? And to me, that's babysitting, is being the adult that is there to make sure that the child doesn't kill themselves. And so he is in the babysitting phase. He will get into everything. If you don't watch him, he will get the dog water bowl and spill it everywhere. That's what he does. He'll do it every time if you don't watch him. He just absolutely loves the dog water bowl. I've changed maybe 5 diapers on our 2-year-old. If we're left alone, that's definitely babysitting. I consider it babysitting. I mean, I'm babysitting and I'm raising my kid, but there is definitely some babysitting to it. Like that's the issue, is that I can't just be like if it was the other kids, it'd be like, I can be around and I can, interact with them a little bit, but I can also take a few hours out to edit a video or work on scripts or whatever the deal is. But not with Asher around. No. For the past year and a half, it has been that you have to keep complete eye on him. That's what older kids are for, but they're going to be gone. But I was going to say is that's what grandparents are for. Hey, grandparents, you love babies, right? You could come and watch the baby all day. All day. Could hire a babysitter for a few hours. Yeah, I maybe I could do that. Maybe I'll have to think about that. It's probably a little bit too late to do that, though, huh? I need to look up when my wife is leaving. She must not have to work until the afternoon. But I'm pretty sure she works today. But yeah, I don't know. I would really like to put this video together and have it ready on Monday, but I think that it would take a lot more work than that. Because I have like a script written out. I need to modify it a little bit. Taking 1 point targets on this market. Why not wait, Ace? Well, I guess you wouldn't care, but there is news in 3 minutes. Why not wait? I'm bored. Well, then hopefully here in 3 minutes you won't be bored anymore. Yeah, here you go. News Squawk, the third part in this week's inflation trilogy. At the top of the hour, watching those consumer inflation expectations. And then David Bell says, the thing with consumer inflation expectations is this, though. Has anyone ever said, wow, things are getting way cheaper? No, that's, yeah. The inflation expectations component of this number is probably not going to be good. But maybe the sentiment is going to be, maybe the sentiment comes up at like 90 or something like that, you know? Oh, maybe that was my wife getting ready because I just heard the garage door open. Maybe she's leaving this morning. I thought that she would come in and say bye, but... Ugh. Today is, according to Mike Lindell, the pillow guy, the day that Trump... Oh, is it really? I had seen some comments about that, but I was kind of unsure what they were saying. Because I was like, it's ridiculous to think that by this date, but I think that he was not making a prediction like conspiracy theory level prediction so much as saying that he was so convinced by the evidence that by this date that the rest of the American public would have come to the same conclusion. And I think that that was maybe what he was saying. And so at that point, of course, it's true that he'd be wrong. And he would just say, well, it's because the media continues to lie. Right. They did have their cyber conference thing yesterday. My understanding is that they had some information from the routers that showed that they were like deleting the SQL files on them and stuff like that. Kind of sketchy stuff, but still not like a smoking gun. Okay, so the liquidity is definitely pulling, not maybe as strong as I thought, but... Oh, that's very bad. Ooh. Okay, Michigan consumer sentiment was 70.2 versus an expected 81.2. So the treasuries are moving higher. Inflation expectations were in line with expectations 4.6 versus a forecast 4.6. Apparently his own cyber expert said that data is bunk. Yeah. Well, I believe him on this whole thing that Dominion came in and like deleted information off of the router, because they continue to refuse to provide that information when they're subpoenaing it. And why would you do that? But that doesn't prove that they did anything, that they manipulated the vote, right? So that definitely created some buying in the Treasury. I think that there might be a little bit of distribution and then another push up, and then maybe we could go short again. But the E-mini seems to be taking it in stride, but maybe that's just because the interest rate. Wow. The University of Michigan sentiment is the lowest since 2012, breaking the pandemic low. That is really bad. When you say you mean yes, right? Yes. Should I call it spoos? So we should use the correct language. I think the Treasury's moving higher makes sense. Yeah, you got 2 points. I caught my 4 there actually. So I take the profits and adjust this here and let her ride. Just let it ride. Let it ride. Look at that Treasury go. So here's the conundrum that I think I come out with here, thinking about how this should impact interest rates. Weakening consumer sentiment is definitely bad and is definitely a negative sign for the economy, and is something that could suggest that interest rates remain lower for longer. However, when it comes to the taper, the most significant metric is still going to be employment. And there are some signs that employment is improving and will be good before the end of the year, and that they could start tapering. Does the consumer sentiment change that calculation? That employment won't get back? I don't know. I've never found the consumer sentiment number to be that predictive of. I've definitely seen it move the markets, but I've never seen it where it's like consumer sentiment changed and then that was the that predicted recession and that sort of a thing. You need a soundboard. Yeah. Could do that, but I need to get baby Asher talking so that he can do things like say buy and sell and make those clips. Well, it seems to me like the ES is taking it in stride, but the Treasury is just taking off. So I wonder here in the E-mini, like, it's a sell, but then it's like, how much of that, is holding because expectations of cheap money forever, Oh man, how far back is this Treasury gonna go? Such an illiquid market. Well, the high was 29, so yesterday's high was 25, so we're only just breaking yesterday's high. I get you. Overnight highs, those are. So even though it seems like such a large move in relative terms compared to the week, it's not actually. I would rather lose and know why I lost than win and not know why I won. Whew. Man, NASDAQ. That, probably in the wrong trade then, because it seems to me that when traders know why they lost, they don't necessarily, they have a pretty good idea of why, and when they win, they have absolutely no clue, although they think that they do. This index is increasingly a political barometer. So they were talking about University of Michigan consumer expectations by political party affiliation. And when you look at the chart, you can see how Republican expectations very much declined going into 2020. And then when Joe Biden won, it really, really took a plunge, and it's just getting worse and worse. Whereas Democrats, it got positive when Joe Biden was elected, but now recently they're also falling. And so now everybody's expectations. I really think from a political standpoint, because I think that Michael McDonough is correct that this is really becoming a barometer. Or Forex Live is correct that this is increasingly becoming a political barometer. Yeah, and but it suggests that even Democrats are souring on Joe Biden, I think. Oh, yeah, I didn't notice that. So the dollar index is taking a beating, and gold is moving up hard. What is that on a relative basis? Not bad. I primarily listen to Democrats if I want to hear criticisms of President Biden. Really? I think that the issue is that there's just so many crises out there, it seems like, right? Like, we all thought when this was the beginning of the year, I think that we all thought that this was over. So the Delta variant coming back is definitely disheartening for people. Okay, but You know what? I think that the Delta variant is going to come and go. I bet you that there's going to be other variants that are going to come and go, and people are going to eventually get bored of it and realize that, like, we don't have to do anything anymore. Or that we've done everything that we can and that people need to live their lives, rather. But there's all of these other things going on. There's a crisis at the border. There's a crisis in Afghanistan. There's a crisis with the budget. There's a crisis with oil supply. It's like, and these are all things that you can tie back to decisions that Joe Biden has made that have gone poorly for him, right? He changed the withdraw in Afghanistan timeline, and that seemed to encourage the Taliban and cause them to come and sweep the country. Like, he's going to eat that one, even though President Trump was saying we needed to get out of Afghanistan. Joe Biden owns it now, right? Disaster. The border, that one is 100% you blame on Joe Biden. 100% you blame on Joe Biden. Oil, also, because he canceled several oil projects and has put some regulations in place that have made it difficult. Like, we had really high oil, like, you can just look at the numbers. As soon as Biden became president, supply coming out of the U.S. decreased. So all of these things are tied to Joe Biden. And so it just kind of becomes a situation where when you look over it, everybody kind of has a reason to be disappointed in him, but maybe in the long run that's positive for the economy, because maybe Democrats won't have as much power and they won't be able to raise taxes and everything else. It's surprising he's not at 0. There you go. AO says no, but he's on my list. I have all of the squawks on a list. News Squawk, Forex Live. I got them all on a list. Nasdaq says, I know for a fact that I can only guarantee a couple of ticks at a time, T, and even that is my suspect because I could always get my stop hit. Everything else is a matter of luck for me. Well, like let's say if you have equal risk reward, what's your win rate? That's always the question in my mind. For you to say you could guarantee a couple of ticks at time T. Okay. Like, if you go in and you have equal risk reward and you win 70% of the time, then you really have something. You really have something that accurately predicts that it is going to hit your target before it hits your stop on equal risk reward. Trump is going to be the next president. So yesterday, I'm so tired today, guys. I'm sorry. Yesterday, there was a news story that Donald Trump had hired some seasoned political operatives. So, kind of a tea leaf that he was thinking about running again. And, oh man, I don't know, man. If it was Trump versus Biden again, I really, really hope that 2024 is not Donald Trump versus Joe Biden. Oh my gosh. You can make you comfortable living with 3 ticks a day, yeah? Listen, if you could make 3 ticks at 70% win rate, I would be awfully impressed. So over here in the E-mini, I'm making one. Let's say one. What should we call it? The rotation? What should we create? The variable that we should use for rotation? Rotation, Greek. Rotation, Greek math. What is the Greek letters that we will use? Torque. Okay, T. Tau. Okay, so if you can get over, if you are taking over 1 tau and you're getting a 70% win rate, that's really impressive. An equal risk reward. Or R factor is what we call it. No, we're going to call it tau because it's the torque. Omega is rotational velocity. Okay, wait, I'm going to see that in this list. Hold on, my window is like not aligned correctly. I can't see the scroll bar for some reason. Omega, the measure of electrical resistance. The rate ascension of an ascending node, the omega constant, the asymptotic bound notation. In probability theory and statistic mechanics, the support, a solid angle. Oh, we could do omega as a W. Okay, I like that better. Because that is the angular velocity or radian frequency. Yeah. Okay, omega. Okay, so if you can catch over 1 omega with R factor greater than 1 and win rate approximately equal to 70%, I'd be really impressed. That to me is like ideal stats. Now, if omega is less than 1, I'd still be really impressed. Just if omega is less than 1, then that means that you have slightly fatter tails in your distribution of your trades. Yeah, I have equal. We have 20 tick stop, 50 tick trail at 50 ticks, 60 ticks, 60 and 100. So you're saying that you try and let it ride as far as you can. Dollar continuing to lose ground against G10 peers and subsequently destroying everyone's end of week FX swap, says News Squawk. Yeah, I bet. Oh, okay. Well, then what is your win rate on that? Because with those kind of parameters, a win rate above 30 would probably be impressive. Well, it looks like the market is in the money printer forever mode at the moment. They might turn back down and then get ugly, but we'll see. You see, well, this is what happens to me is if I try and let anything ride, it comes right back to my entry and then I break even, or I take the loss and I break even. Not break even, it would just only catch the one, right? My win rate depends solely on the quality of my setup. How do you know that, though? Like if you trade that for a year and your win rate comes out at 30%, which is about what you would expect based on the R factor of the trade, then you kind of have to question if there really is anything to your setup. Because even if you're making money after the end of the year, that's enough that you could say it's random. That's why, like, I say 70%. Like, if you come in and you were equal risk reward and you were winning 55% of the time, that would, like, you would probably be coming out with money, right? But for it to be 70%, there's no way that could be random, You haven't tested your win rate, so you don't know. I feel position trades are best. Well, so we talked about that one the other day, didn't we, Aho? So you got to remember that with position trading or swing trading, that you're in the market longer, and so that changes things, and you're going to get you're actually far more likely to get profits from doing that, but you're in the markets for so long that you then have to think about opportunity costs and what you could have done if you were just long the market all the time. Man, these treasuries are just going cray-cray. So now they're at the weekly high. Oh. Okay, we'll see if I can. Somebody sent me this video to describe a setup. We'll see if I can automate it. That should be fun. Are you saying that if I hit 20 ticks or something, if it was, well, I don't know what it is for NQ, but if your stop was 20 ticks and your target was 20 ticks and you hit your target with 70% accuracy, I would say that's amazing. Yes. I'm wondering if the E-mini's not going to come out and stop me out and then push lower. Okay, so we're probably going to start seeing a little bit of distribution here in the treasury. I'm going to reset things. You're at 4K? Wow. Were you along the E-mini there? Or sorry, were you along the treasuries? I'm really curious how far this gold gets. Here's the thing. I see really fishy things in gold often. And the way that this has been going, it's like we'll get this really good long, and then later in the day, for absolutely no reason, it'll get slammed back down to the lows. Oh, look at the treasuries going for more. Oh, that was a reload right there. Guess not. You mean you turned back down there pretty hard? Gold, I get a slam back down, I bet you, yeah. How many times has it done that, really, when we got a really promising looking move in gold? What I say, I can break even at 10 ticks maybe 60% of the time if my setup is excellent. You know, that setup is excellent. Qualifier is not a fair qualifier, right? They're kind of predictable. Well, the thing is that I feel like for the last, let's say, year or so, their behavior has kind of changed, you know? Live action says, I guess the market doesn't care what the Michigan sentiment is. No, I think it does. I think it does. I think it's just that right now they're battling out how much it matters if the interest rates stay low forever. Dang, can't catch a break there. Well, I'm trying to do it, like I'm trying to scalp at hard stops and everything, but let's try holding it a little bit bigger. That's not particularly good. I tried catching the edge. Ouch. I tried catching the edge on that one, and it just got creamed. Yeah, I just got creamed, dude. And that's the end of that one, too. It's lost $3. Well, I don't care so much about that. I mean, if gold gets back to 1760, then I'm going to be like, you see? Okay. It could turn to that level, yeah. But that's where I'm saying, like, that's when I'd be like, what a load of crap, you know. That's what I was trying to get at. On the other hand, I don't, you know, like the dollar is going down, and I assume that that's why gold is moving the way that it is. So it looks like it's just correlation with the dollar. So like, what would really be bullcrap is if the dollar continued to go down and closed at the lows of the day and gold still mean reverted. Then it would be like real. Then that's really BS. Michigan. Well, I think that Michigan sentiment pushed the dollar. Like I said, it so far it looks like it's mostly about the dollar. Yeah, if I had the dollar, he agrees. Yeah. At least that's what the market seems to indicate at the moment, and I think that matches up with what the news was. The thing that doesn't necessarily match up with what the news was is the S&P 500, right? Like, you would think that consumer sentiment would drag most particularly on stocks, but perhaps the reason why the market is finding reasonable support here is because they continue to believe in the Fed backstop, right? That would be a good play, trading the arbitrage between gold and the dollar. Maybe. I think it would be really hard to get ratios right on that, you know? Stupid comment I made about sentiment started to lay. I only pulled up the, yeah, well, no, I mean, I think it's still a very good comment. Live action. Like, I mean, it's exactly the thing that I'm thinking, because shouldn't the S&P 500 be down at like 4450 by now? That would make a lot more sense to me. Go short the dollar and go long gold and silver. Yeah. Well, no, that wouldn't be necessarily trading the arbitrage, right? Top Dog Trading specifically targets your channel for it. I don't know. I don't think that you can target a specific channel. But you can target, like, say, day trading content. You can? Maybe you can. I don't know. If I was going to arbitrage it, I would like go long both of them, right? Because I should make money on one and I should lose money on the other one, and I should make the money off of the mispricings between them. I do get ad revenue from YouTube. Yeah, we've been using it. Like that's how we have like a nice camera and lighting and chalkboard. Although the chalkboard, my wife kind of actually got a deal on, so. And I think we'll continue to do stuff with it. I've kind of still been thinking a lot about if there's anything that we should get that would help the stream. But I'm not so sure that there really is anymore. So I'm just kind of saving it up in the hopes that like maybe in the future there will be a situation where it makes sense to like pay somebody to edit a video or to spice up a script or something like that. It's kind of what I'm thinking. Finally the fill. Okay. I always get Carter's ads, really? like the baby clothing store? Or is something else? You know, it seems like the number of day trading advertisements that I get on YouTube is a lot less now. John Carter's option trading. Oh, okay. I remember there used to be a bunch of ads that I thought were so ridiculous. Like, there were people trying to present some credibility, but it was really hard to take them seriously. Like, I think the worst one was that lady that was like, "Oh, it's so easy. I have my kids day trade. I'm just this mom that started trading and I was just naturally awesome at it, and now I'm teaching you how to do it." And then like I went and I read like what their trade was. And it was literally like a financial viz filter, and then you buy it, and it was like the most ridiculous. And they were like asking so much for it. It was like, this is the biggest scam freaking ever. She is so totally full of complete shit, like criminally so. For your TikTok video, show them the jigsaw dom and explain what it all means. I should. Well, I'd like the question is how do you start the video out and do something that like really makes them interested, you know? Oh, hey, Ace trying to short. I like that. And compare that to technicals. Yeah, I don't know. So like the video that did well, I kind of wonder why it did well. Like how at first I stitched a part of his video because his video was he had a chart up and he's like, you never buy but when the stochastics are below this level or whatever, like never. But like his chart was so ridiculous, and so I started like, is this guy serious with this chart? Like, because I watched it like 20 times to see if it was a parody. And I think he was serious, right? And that kind of like, you know, a little bit of drama seems to draw people in, right? But then when we actually get into like actual information, it's a little hard to keep people's interest. It really is. Like, I'm sure there's a lot of people that do find that information interesting, but the algorithm just doesn't send it to them because not enough of the people that start out watch enough of it. You know? It's a tough conundrum. One of the things is I kind of go back and forth on TikTok too. There's some points where I'm like, well, TikTok is like one of the best ways to grow. But then I'm like, yeah, but whatever attention that I get from TikTok is like short-lived and doesn't matter, and I really should be focused more on making really good YouTube videos. Because I really feel like we could make better YouTube videos. I'm not sure like how to get myself there. You will hate this content by the time you are done, but you will be glad to know it exists. I don't know. Like, no, I have different ways of doing it. I'm planning on making a bunch of order flow videos next week because a lot of people were asking for it on TikTok. But on the video, like when I was saying, you know, like I really need to figure out how to make the videos better. So like the issue with the videos is like my videos are very, very, very content dense, right? But I don't think that there are enough elements in there to keep people interested and engaged. So what I probably need to do on my YouTube videos is like I need to make them funnier. You know, like I need to be funnier about it. And it's kind of like, oh, but like what happens is my serious side takes over and then it's not, you know. Like I can be funny if I'm like in the right mood, you know. So that's why I was thinking like, well, you know, like maybe it would make sense to pay somebody to help spice the scripts up or something, like Trump and Arnold on a soundboard. This is why I'm saying like we just need to have Ace on the squawk every day because and he can joke around with me because he would be funny and engaging. See what popular ones are doing and build back better. You know, I actually been doing a lot of that, but like, I don't know, man. My favorite video of yours was the girlfriend market you trade. Yeah. Yep. You can hire me. Yeah. Unfortunately, I'm not making enough money from the stream to pay you like that. Not to pay you a living wage, at least. If you want to work for poverty wages, $1 an hour. Because that's basically what that's if you look at like what you make from the advertising on the stream, that's what it comes out to is like $1 an hour. Well, so do you think that it's slow right now because it's Friday and they're just done and they're not interested in doing anything? Or do you think that maybe some more bear action is possible and that maybe after London closes and stuff that we could have some more downside? Because for me, it's becoming the former. It's like it doesn't look like it's going to do that before we've got to go. I still haven't seen morning reversal. Well, it's been a lot more, what is the word? rangy. It's been a lot more rangy. Arnold doesn't care about you expressing freedom. Oh man, that quote was pretty funny. I thought. I was like quite shocked that you would say that. Hey, that one worked out really well too. Okay. Next week should have some action. Well, it's gonna be. I came into this thinking, okay, like consumer sentiment is a pretty important, it can be a relatively important number, and we're going to see some things, and especially with the inflation. But it really wasn't what we expected at all, was it? Because, yeah, we got the inflation number, but the headline number was so terrible. I'm not sure I've ever seen a consumer sentiment number that disappointed worse. And, I was kind of thinking before that, hey, maybe the S&P 500 is a little vulnerable to some downside, that maybe in the fall we could have a 10% decline or something like that. Now, well, and then there was the whole taper thing. I was like, definitely if they taper, there's going to be like a 10% decline. Now with the consumer sentiment going that way, I'm really wondering where we come down now. Oh, I'll be surprised if the markets fell next week. I suppose I wouldn't be either, but I don't know. Like, that's the thing, is this particular piece of news, I'm not sure I really know how significant it is. Like, the way that the market is behaving is kind of giving me mixed signals on that, right? Like, the Treasury is saying, like, that's a really big deal. But the Treasuries have kind of, like, supply constrained anyways, and are, like, kind of prone to, like, these stop runs higher. So I don't know if I can really read too much into that. The E-mini, it kind of is saying it's no big deal, especially since the interest rates are low. And I kind of feel like that doesn't match up with the fundamentals, but I could, like, we don't really necessarily care what the fundamentals are. We care about what the orders are going to do and what people do in response. People in response, I guess they don't care about it. A lot of retail traders don't look at this number. So it makes it very difficult for me to game out and catch a really good handle on, where that's going to go. But you know what's happening with that sort of stuff. If I can opine on the get vaccinated thing, is the media is trying to make a PR campaign. It's the whole virtue signaling sort of a thing, but that they want to convince people to get vaccinated, right? And the way that they've been going about it is by villainizing anybody that's not vaccinated. And so, like, one of the top stories on Reddit this morning when I got looking was a story from the who is it? Salon. It was from Salon, which is a very liberal website. From Salon saying, yep, all of you people that didn't get vaccinated or mask up, this is all totally your fault. And we're all totally mad and angry and hate you because you didn't mask up and whatnot. Which is really quite ridiculous if you think about it. Like, the people got the vaccine. The vaccine was not a full solution, it turns out, because it is not effective enough against the Delta variant. many of the places that were like the most vaccinated are the places that are like having the highest Delta breakouts right now. You know, so what's happening is all of these actors are kind of picking up on that and parroting it. And I don't think that they really think about how offensive and ridiculous what they're saying really is. People with PhDs are the largest group of vaccine hesitant and fastest growing group. That wouldn't surprise me at all. But I'm also told that one of the most significant, most vaccine hesitant groups, rather, are black youth, like teenagers. They think that the government is experimenting on them and stuff. It just seems so weird to me. Like, you want people to get vaccinated. Like, you would think that the way to go about this is do some studies and do some, focus groups, get a bunch of people that are vaccine hesitant, and then test out different messaging on them to see what are the most effective ways of convincing people to get vaccinated. And then that would... and what are the worst ways? And if you look at what are the worst ways, I'm sure that you would almost certainly find that it is the things that people are saying right now, like villainizing the people that haven't been vaccinated, the shutting down information and particularly any information that isn't 100% positive to it. It's just like this sort of thing. It's just... If there's vaccine hesitancy, and I don't think that it's really a huge contingency, but I think that it's largely because of, their strategy, their attitude, what they're saying. If I hadn't have been sick, then I would probably have gotten vaccinated. But I certainly do have to sit down and think that, like, if it's really that effective and there's no problems with it and there's no reason to be hesitant, why do they take that attitude? Why do they take the attitude that they do? They just can't help themselves, I guess. Maybe that's it. Maybe Democrats are just children these days. I don't know. Propaganda campaign is so large because probably most people are Nah, I don't think so. I'm pretty sure that 60 to 70% of people have gotten the vaccine. The thing that I find problematic is that even though we had very high numbers of people get the vaccine and people masked up, these do not prevent large widespread infection. They just don't. Like, not when there's already a large number of cases out there. Like, if you live on an island and you can completely shut down the one case, and, that's a different thing. But when there's already thousands of people that have caught it, like, it's going to run through the population to a certain percentage. And it turns out that percentage is high enough that, so... At what point do you sit down and you say, there's diminishing returns here? You know what I mean? Like, yes, if the U.S. government told everybody today, you have to stay in your house, you literally cannot leave your house. The government is going to drop everybody like food supplies. And you can get the food supplies, but nobody is allowed to leave their house or they'll shoot you. Which is what they've been saying in Australia, by the way. Okay, like, and you did that for like 3 months, then maybe yes, we would eradicate coronavirus and like any other contagious virus potentially, right? But like, at what cost? Like, I think that these things have like diminishing returns. Like, getting 70% of the people vaccinated, that certainly helps because less people are dying, right? But doesn't end the pandemic. So, doing all of these other things like vaccine passports, for instance, diminishing returns, guys. Like the amount that helps is, in my opinion, pales in comparison to the freedoms that you're taking away from people. Haven't done any vaccine research. Well, what the last article that I read on this was saying that the Pfizer vaccine was only like 45% effective against preventing an infection from the Delta variant. And that is basically why we're seeing such large outbreaks, even in places like Israel, where the vast majority of the population has been vaccinated. Australia is now a scary nation to be in. I kind of agree. But you know what? Australians don't seem to have a problem with it. So, hey, if that's what they want, then... And any of y'all that aren't down with that, you can move here. We'd be more than happy to have you. The Salk Institute says that spike protein alone is enough to cause disease. I'm not convinced about that one. I think that there were some people saying that the spike protein is dangerous on its own. They shut their borders till 2022. Well, the thing that was alarming to me that I heard about Australia was that, the government was literally... It was a government imposed lockdown at gunpoint. Like if anybody got out of their house, they were stopping you unless you were going to the store. That's really why be convinced. I need to read that study, and I would have to look at the credentials that they have on that. One of the issues that I'm seeing with the coronavirus pandemic in particular is that there is a lot of research, and not all of it is really actually reliable, you could say, right? Because like straight up, our understanding of the vaccine based on the information that was used to verify the vaccine, and then the information that we got about the efficacy of the vaccine on the Delta variant, right around the time that the vaccine started being given out and everything, all suggests that the things that are happening right now with the Delta variant shouldn't be happening. So I think we could say that without question, the experts and the researchers and stuff got that one wrong, that the vaccine is not that effective against the Delta variant as they said it was. The inventors interview. That one's an interesting... I'm not going to touch that one. YouTube, I don't think would appreciate us talking about him. I would only say that he made a key contribution to the science, yes, but I wouldn't say that he invented the vaccine. In Israel, 90% of hospitalized COVID patients are really. Well, it does make you wonder what. If the vaccine, that you have less severe cases and things like that, but then I wonder, okay, so how good is the natural immunity? How good is the natural immunity? For that matter, why would there be a difference between the vaccinated and the natural immunity? Explain that to me. You read Nassim Taleb's research on IQ, and his article was complete garbage. What did you not like about his article? Because I think that Taleb has a very sound mathematical argument about IQ to explain why a lot of the things that people say about IQ is complete garbage. They're fat-tailed distributions. The variation within groups is is more significant than the variation between groups. And so to say that like one race has a higher IQ than the other is like from if you really understand the math and statistics, you won't be saying that because you understand that those averages mean nothing. He cites as new research what you just said. Well, it's not even so much new. Yeah, it's not new, but Taleb has introduced some. So the thing is that what I think Taleb has done, from my understanding of it, I haven't read enough of his stuff to completely know all of the math about it, but. It wasn't just that he came in and he said, hey, there's fat tails and you have to deal with them, but that he's shown when you do have a fat tail distribution, here's other tools that you can use. And then he was able to take those tools, and I don't think that he invented those tools per se, but then he was able to take those tools and apply them back into, some of the economics. I will not cite psychology research because it's bunk. But his so. The big thing is like we need to understand what is his thesis, right? So you're saying he's making an analogy to the misuse of IQ to be shown to justify racism, so we should discredit it. No, but here's what I think he's saying is that faulty statistics are being used to justify racism. Therefore, it is contingent upon us to teach people the correct statistics and to discredit this non-scientific research that is being used by racists to promote. Because really what he's talking about is he's talking about the stuff by who's that guy? There's the guy that they all complained about him. He got punched in the face, and he was a part of the alt-right. And then, like, when you actually started talking to him, you basically realized that he was a crypto Nazi. Like, he was saying, the U.S. should be a nation for white people, and all of the white people should leave. And it's like, okay, so how are you going to do that? Oh, yeah, probably you're going to commit genocide. Yeah, this is that guy. And he has a whole website where they go through the research on IQ, and they go and they say, oh, look, you know what? White people have a high IQ and black people have a really low IQ. And that means that black people are less smart and can't live with white people. But here Nassim is saying, okay, no, because what you're saying completely misunderstands the statistics. What you're doing is you're looking at the average of the two of them, and you're saying the average of this is higher than the average of this, which is absolutely silly when you realize that they are fat-tailed distributions. If it's a fat-tailed distribution, the average doesn't matter. The average doesn't really tell you a whole lot, because there's more variation within the groups themselves than there are between the groups. Right? That's like the thesis. So if I was to hear, oh, his argument is bad, like, disprove the central thesis. Scientific study requires a hypothesis and tests. Yeah, like, this is something that I see happen a lot in trading. That, I think that, and I'm not saying that it's you guys doing this, but there's very often, I think, that we get people that are autistic, and people that are autistic don't seem to be very good at differentiating between the thing that they are triggered about and like the actual point that's being made. Like Greta Thunberg is like a really great example. She is like, it's really actually insane. It is really crazy that she has been held up as the leading fighter on climate change, because she's basically saying things that she's exaggerating things and making it out in a way that is not scientific. When they say that, like, you know, the world is just basically going to be in flames and we're all going to be dead in 20 years, that's not what the science says at all. And climate change alarmists very much exaggerate what the science says. I think that the science is like 2 degrees over the next 100 years or something like that. Okay, which is a problem. Don't get me wrong, but it's not going to kill y'all. Okay. And so when people will make an argument, like they'll get really stuck up on details that aren't really very pertinent to the point that they're making, you know? Like that's really what it comes down to. Like I think that this is Jordan Peterson talks about this, that like the thing that you know requires a little bit of intelligence to do, but like is really impressive, is to be able to argue to the argument that they're actually making, and make an argument that convinces them that they're wrong, rather than finding something that you can nitpick and focusing on that, right? Happens a lot. I totally understand why Nassim gets so frustrated about things, because what's really happening with Nassim is that he's pointing out certain societal issues where people have a strong opinion on that societal issue based on faulty statistics, is really what's going on. And they don't like it being told it. So it's another one of those situations where like everybody has a reason to be mad at him, and he's just so belligerent about it because he knows the statistics and he knows he's right. And like honestly, if you haven't seen his like his videos on YouTube, like go and watch his videos on YouTube, because it's like he really understands the math. Like you would not, did you know that he was basically like, he started at one of the, well, let's go read his Wikipedia article. Okay. Taleb received his Bachelor and Master of Science degrees from the University of Paris. He holds an MBA from Wharton and the University of Pennsylvania, and a PhD in Management Science from the University of Paris. Okay. And then he was a managing director and proprietary trader at Credit Suisse. Okay. So like he went to school and he was a trader. And then it wasn't until 2006 that he had made so much money from doing that he basically retired and became a researcher and scholar. You watch his videos, you would never think that. You would think that he was like this university professor that has lived at the university all his life, and all he's ever done is think about the math. And he's been teaching it to people for decades and decades, and he happened to use his expertise on finance. That wasn't what happened. Right? So yeah. Your son died from that? Okay. Oh, what's this? Jigsaw. Oh. I guess they're doing a webinar today. Oh, dude, I am like, oh my gosh, you guys totally distracted me. I got to get going. So, hey, so today, consumer sentiment disappoints. Consumer sentiment crashes. Yeah. It's time for me to go. I will see you guys on Monday. Huge day for us on Monday. Don't miss it. In the meantime, stay profitable, friends.